March. That was as of December 7th on Friday of last week. The Dow closes down 550 points. The markets are shaky at best right now. They're seeing a little bit of gain, but generally they're seeing a lot of drops in the stock exchange because of the uncertainty of the trade wars between U.S. and China, and because of the unemployment numbers that are coming out soon, and also by the fact that there are a lot of financial institutions and a lot of big money companies that are concerned about the cryptocurrency that's going on. So here we have a 550 point drop as of Friday, the biggest weekly fall since March. Let's take a look at what the Bitcoin and the cryptocurrency markets are doing. Bitcoin price eyes support at $3,000 as the crypto market sets new yearly low. So the crypto markets also are seeing a fall in the prices, especially in Bitcoin in general, at $3,000 generally, give or take some. And of course, since Bitcoin is the granddaddy of all the cryptocurrencies that are out there, everything else is being attached to Bitcoin is going to follow the ups and downs of Bitcoin in the market. Now I want to take a look at this here. This is the top 25 coins in the cryptocurrency market. And you'll notice that they're all in red here, generally. 23 of the 25 are in red. 2 of them are in black, meaning that there's no change at this point. And generally we're going to see that there's red marks throughout the cryptocurrency market. But there's nothing really to be concerned about with the cryptocurrency market because of the fact that it is a new asset class. It is just starting out. It's only 10 years old. Bitcoin started it 10 years ago, and now all these other coins have come into the market. Generally right now there's in the neighborhood of 2,000 plus coins in the market, and each one of these ticker symbols here represent either a cryptocurrency coin, a company, or a segment and a sector of the cryptocurrency market that is a niche market for cryptocurrency, where the company is eyeing a certain aspect of the cryptocurrency. In some cases it would be used for banking and cross-border payments. For others it will be used in the medical field. For others it will be used for security. And for other of these tokens it's used to get information into the hands of the consumer quicker, and to be able to pay authors for their books, for their articles, for their time, for their movies and things like that. Instead of having the screen here like you're seeing here with advertisements on the sides that come up and down in banners like we're used to seeing, those things are going to start to go away with some of the new startups and the new technology that's in the cryptocurrency market right now. So although we're seeing red here in this, there's not very much to be concerned about with, because the cryptocurrency market, or the Bitcoin market as some people call it, is really in its infancy. It's only 10 years old, and if you were to take a look at and lay over one chart of the cryptocurrency market here in its first 10 years and the first 10 years of the .com or of the internet, things like that, you would see that they're basically following pretty much the same kind of patterns up and down. Now, why do I say that there's not much concern here concerning the cryptocurrency market? I'll show you. Here's some of the headlines that are going on around here, and some of the people behind the scenes that are involved in what's going on in the cryptocurrency market. And these are some big players in the market. There's manipulation going on behind the scenes that these guys are all a part of, and you see these prices going up and you see these prices going down. Like earlier in the year, we saw the prices go up to $20,000 for Bitcoin, and then after about a month or so we saw the prices come crashing down. That was nothing more than manipulation on the part of the big players in the market, trying to bring it down to scare the people out of the market who are just weekend warriors or evening traders, or those who are weak and have no constitution to stay in the game long enough to see their investment become a profit. So when they get in and they see that what they invested in is going down, they say, oh geez, well, just I just put money into a losing trade, into a losing cryptocurrency. I'm getting out before I lose it all. And being weak as they are, they get out and they don't stay over time. These guys here that I'm going to show you next, these players in the market, they know that. They know that they can still shake those who have a weak constitution and will not stay the course. But for those of us who are willing to stay the course, we're going to be paid with the reward of seeing our investments in cryptocurrency skyrocket here soon because of some of the headlines that are going on that you may not be aware of. For those of you who've been in the market for a while, you know what's going on. You know the headlines. You know who the players are. Here's one of them. We have the New York Stock Exchange, who is opening up for other customers in the market. And as they start to see the markets in fiat currency start to shake more than what they're doing now, there's going to be a lot of people that are going to be coming into the cryptocurrency market. And the New York Stock Exchange knows that. That's why they've set up a platform. That's why they've gone to the point of putting all the work into creating a platform and hiring people and getting the system up and running. And they're getting ready to launch in January 24th of 2019 is their date right now, that they're going to go live and that they're going to start welcoming the retail customers in and start giving them the deals of a lifetime. For those of us who are in now and are watching this from the sidelines, and every time they drive the price down, we go in and we get some bargain basement prices on the cryptocurrencies that we watch, that we collect, that we like, that we think are going to go good and are going to produce a good product and be a long-term player in the market. Thank you, Bakkt. Thank you, Fidelity Assets. Thank you to all the other players who do that so that we can get in and gain some more cryptocurrencies for our portfolio, so that when you guys shoot the price up through the roof, we're going with it and we're going to be filthy rich. Here's another player that's in the market that I just mentioned recently. That's Fidelity Digital Assets. And as soon as my screen clears and it comes up, you'll see the article. Get rid of some of these tabs here so that this thing will come up. Okay, we'll go to the next one. Here we go. Ivy Leagues are investing in cryptocurrencies and Fidelity wants to be their custodian. Out of the Weiss ratings here, they're saying that Ivy Leagues are investing their dowry, their endowments into the cryptocurrency market. How much each university has invested into cryptocurrency is private. They don't let us know that. But generally, you've got Stanford, you've got MIT's endowments, you've got Dartmouth, you've got University of North Carolina, you've got MIT invested some of their endowment into cryptocurrencies. Now, these guys who are smart guys and who all know each other from being in the government and being in these universities and being in the finance realm. If these guys are all investing a good portion of their billion dollar endowments into cryptocurrency, then there's got to be something about it. When you got the smart guys from Yale and Harvard and Stanford and Dartmouth and then North Carolina University and MIT, there's something going on, and we need to take notice of it, and we need to see the writing on the wall. Come on, get out of there. Okay, Fidelity Digital Assets is just, here it is. Fidelity Digital Assets could launch with the top 7 cryptocurrencies. Fidelity had, back on October 15th, they launched their digital asset platform, and they are open, and it's scheduled for Q1, where they're actually going to be performing services and launching it to their customers. But they have already made known that they are in the game as of October 15th. And they are ready to start selling to their customers blockchain technology, cryptocurrency, coins and tokens, and shares of the company, basically. so that their customers will have the ability to be able to trade with the top 7 cryptocurrencies when it's opened up to the public. So Fidelity Digital Assets, who is the largest, one of the largest anyway, holders of retirement accounts in the world. They've got $7+ billion in retirement assets alone, not counting any of the rest of the assets that they manage. But Fidelity Digital Assets is in the game. So these are some big players. Now, what about the U.S. government? The U.S. government, if we take a look here, the U.S. government has some things going on here too. It says down here, U.S. Department of Homeland Security calls on blockchain startups for anti-forgery solutions. So they are concerned about forgery. They also have U.S. Air Force grad school issues blockchain for supply chain primer. So the military is also getting into it. And the U.S. Treasury official calls on crypto industry players to combat illicit use of crypto. So they're also, again, looking for protection for those who would be using the cryptocurrency. President Trump has an advisory panel that he's had put together, and they are looking at the way to use cryptocurrency in the government and to use it to make sure that America doesn't fall by the wayside and doesn't get left in the dust by the rest of these nations around the world that are using cryptocurrency. Now, cryptocurrency, it says, is under attack by the U.S. government again. This one is just stating that the U.S. government is, according to this person's, Christian Reeves, their viewpoint is that since the unregulated and decentralized digital money is revolutionizing financial markets, our government, the U.S. government, is scared, and the banks are looking for ways to control the flow of capital and profit from blockchain. Basically, what it's saying is the government does not want to not know what its people are doing. It doesn't want to not know what is flowing in and out of the financial institutions and what is going on in America with the people and the finances. They've got a good stronghold and a good stranglehold on it right now through the avenues that they have that are entrenched in the asset classes right now and in the institutions that report back to them because they're all tied together. And the governments of the world who are not embracing cryptocurrency are going to be left behind. But the governments of the world that are embracing cryptocurrency, and there are many smaller countries right now and governments of smaller countries that have already embraced cryptocurrency because it actually frees them up for their citizens to be able to have a way to be able to work their finances, not have to worry about having their funds stolen in the country that they live in, and it's making banking easier across many countries in this world. Now, the bigger countries, the older and well-established countries like the U.S. here, they don't want to lose control of what they've got. So they're fighting to make sure that they keep their piece of the pie and actually make more money in the process and continue to keep that stranglehold on the people of the U.S. But cryptocurrency is throwing a monkey wrench into their plans, and we'll see how the SEC goes about the first quarter of the year with stating whether cryptocurrencies are a security or not. Some of them will probably be considered securities and will be under that stranglehold of the U.S. government. Some of them will not be considered securities and will have less stringency actions taken against them or less regulations that they have to follow. But it's likely that all cryptocurrency companies that deal in the U.S. will probably end up coming under some regulation, just like the ones in China and in the Middle East and in Japan and all those other countries where there are regulations in those countries as well. But basically, cryptocurrency is here to stay. Cryptocurrency is nothing that you need to be ashamed of or afraid of. It's nothing you need to shy away. Actually, it is the wave of the future that's getting ready to crest right now. So my advice to you is to take the whole idea of cryptocurrency, learn about it, understand it, study it, and get involved in it. And if you can get involved in it and invest early, like right now, would be a good time to get in on the early stages of investing, so that you can make your money like the early investors did in the dot-com bubble and in the internet craze. And when that bubble got to the point where it got too big and it was ready to burst, then those people who made their money went on to the next thing. Then you've got your Amazons, you've got your FedEx, you've got your companies of that nature that have come out of those and are living high on the hog right now, because they took those dot-coms and those internet bubbles and everything else and they rode them, and then when it was time to change, they took their earnings and their fortunes from that and invested in the next big thing. But right now, if we as investors would get into this and would learn cryptocurrency and would actually invest in some startup companies that are coming along the way, and that the younger ones that are already in the cryptocurrency space, and ride them as they go up, then we can make our fortunes as well, potentially. And then we can see when that next big wave for the next thing behind the cryptocurrency is in the next sector of cryptocurrency in the world. And then we can ride that wave and continue to invest in those new technologies and those new waves as they go. So that's my overview on cryptocurrency, on the markets, on the conditions, and on the whole idea about investing in the blockchain technologies and the cryptocurrencies. I'll talk to you soon. Take care. Be well.